Good morning and welcome to Payroll Today with Ahola. This webinar series will cover trends and topics that affect the entire payroll space when they happen, with the intention that all of our viewers are better educated. Today, we will be discussing ACA with a brief overview of what the Affordable Care Act is and how Ahola can help clients that are required to report ACA. So my name is Oscar, and I will be the one to host the discussion today. I'm the Learning and Development Department Manager here at Ahola, and I've probably been with Ahola for nearly 7 years, and I bring a total of 10 years of payroll experience. And today I wanted to introduce our Operations Support Manager, Carrie Horton, who oversees our ACA team and manages our ACA services here at Ahola. Carrie has over 28 years of experience with payroll and tenure at Ahola, and she has managed our ACA process for over 5 years. As we go through the presentation today, if you find that you have any questions, feel free to reach out to us. You can reach out to me by emailing training@ahola.com. And any questions about ACA or Ahola's ACA services should be directed to our ACA support team by emailing aca@ahola.com. Now, before we begin, I'd like to remind you that we are not attorneys. This session is intended for educational and informational purposes only. We do hope that you find these presentations helpful and informative, but the information presented today should not in any way be construed as legal advice. As always, if you have questions about how this information may affect your business specifically, we recommend that you consult with your business advisor. For those of you who may not know a lot about Ahola, we are a family-owned payroll and HR service provider headquartered in Brecksville, Ohio, with 55 years of payroll, tax, and HR experience. We've served over 10,000 small businesses nationwide. Ahola offers a full range of payroll and HR services and software. Today, our staff of payroll, tax, and human resource professionals serve thousands of businesses by helping them with their human capital management needs. In today's presentation, we will discuss compliance with the Affordable Care Act mandates. Who is required to file? Who is covered? What if I don't comply? We will also touch briefly on measurement and lookback periods and how those may affect administering your plans. Finally, we'll discuss filing deadlines and how Ahola helps clients using our ACA services. So, what is the Affordable Care Act employer mandate? The ACA employer mandate requires employers with 50 or more full-time or full-time equivalent employees to provide healthcare coverage that is affordable, provides minimal essential coverage, and meets minimum value requirements for at least 95% of their full-time employees. Now, what does this mean exactly? We'll talk more about FTEs in just a moment, but let's look at the other components of the mandate right now. The first requirement of the mandate is that coverage must be affordable. To be considered affordable for a job-based health plan, the employee's share of the monthly premium in the lowest cost plan cannot exceed 9.12% of their household income for 2023. In 2024, the threshold for affordability is reduced to 8.39% of the household income. Keep in mind that this does not mean the plan they select or enroll in, but the lowest cost of your plan you offer that they should participate in. Because it is unlikely that you would know household income for your employees, there are 3 safe harbor calculations that can be used to determine the affordability of a plan. Those safe harbors are W-2 wages, employee rate of pay, or the federal poverty level. Benefits brokers should be able to advise you on how to verify plan affordability for your employees, as well as which safe harbor or multiple harbors are best applied for different groups of employees. We have minimum essential coverage, or known as MEC or MAC. These are plans that must include items and services that cover the 10 benefit categories that are considered essential health benefits. We won't go over that list here, as it's pretty lengthy, but it is relatively straightforward and can be found by searching Essential Health Benefits ACA. Most plans will cover these essential items, but benefits brokers can direct you to the plans that meet this criteria or confirm that your existing plans meet the criteria for this part of the mandate. Finally, we have minimum value, MEV, or known as MEV, for a plan. That means that it must cover at least 60% of the total allowed cost of benefits that are expected to be incurred under the plan, and it must be offered to at least 95% of full-time employees. Again, we do recommend consulting with a qualified, knowledgeable benefits broker to ensure that any plan you select meets this criteria and is offered properly to your workforce. As far as who is required to report, businesses that employ 50 or more full-time or full-time equivalent employees, which is also known as FTEs, are considered applicable large employers, or ALEs, and these businesses are required to file ACA reporting to the IRS. For clarification, a full-time employee for ACA purposes is any employee who works an average of at least 30 hours per week or 130 hours per month. FTEs, or full-time equivalents, are part-time workers counted as fractions of full-time employees, and that's based on the number of hours they work. FTE counts are calculated by aggregating the total hours worked by part-time employees, but not more than 120 hours per individual, each month during the prior year, and then you take that number divided by 120. This number is added to the count of full-time employees to determine the FTE count for a month. Once each month's count has been calculated, they're all added up and divided by 12 to determine the average FTE count for the year. Reporting requirements are based on the average FTE count for the preceding calendar year. For example, employers who are required to report for the 2023 tax reporting year had an average monthly FTE count in the excess of 50 in the calendar year 2022. Ahola clients currently processing an iSolve can run or request the ACA Large Employer Compliance Test report for the prior calendar year to get their FTE counts, and they can receive assistance in determining ACA reporting requirements. Some smaller businesses may be required to report to the IRS, but only if they are part of a common ownership group or relative entities, where the combined workforce of all of the group members meets the ALE criteria of 50 or more full-time equivalents. Any company whose health insurance plan is a self-insured plan must report for ACA, regardless of their employee size. These self-insured companies do not use any look-back period to determine reporting requirements. Penalties for non-compliance are hefty, and historically they increase each tax year. For the 2023 filing year, the penalty or hammer penalty is nearly $3,000 per full-time employee. Not offering coverage to the right employees or groups of employee can cause significant problems. And it only takes one employee receiving a tax credit through the marketplace to trigger this steep penalty. They call this one the hammer because it's calculated on a full-time employee, all full-time employees, less the first 30, once it's triggered, and can cost employers hundreds of thousands of dollars. Now, the B penalty is assessed when coverage is unaffordable or does not provide minimum value, and one or more employees receive subsidized coverage through an exchange. This penalty is only imposed for each full-time employee receiving the subsidized coverage through the marketplace for the month. While it's only addressed or assessed based on individual employees, this penalty can cost you thousands of dollars if the entire plan year is affected, even if it's just for one employee. Enforcement for the ACA mandates that this is only going to get more strict going forward. Over the next several years, the IRS will receive billions in additional funding in their budget for tax enforcement. This can only mean bad news for employers who willfully or accidentally ignore ACA reporting responsibilities, or do not offer an acceptable insurance offering to their employees. In addition to increasing penalties, IRS is also stepping up the auditing and enforcement of ACA employer mandates by hiring tens of thousands of new tax examiners for review filings. So for measurement methods and look-back periods, employers can select one of the two methods for measuring hours for part-time or variable hour employees in order to determine the benefit eligibility for ACA purposes. Both methods have pros and cons that should be considered before selecting a measurement method for any non-full-time employee. While it may be easier to use one measurement method over another for certain employees, keep in mind that measurement methods must be applied consistently and fairly to groups of employees. And there are only a few circumstances under which you may use different measurement methods for different groups. Now, those are limited to hourly versus salaried employees, employees in different states, union versus non-union employees, or employees in different union groups. Outside of these limit class distinctions, the same measurement methods must be applied to all employees. In order to determine which measurement method best suits your business, it's best to evaluate your workforce, salary versus hourly, how much fluctuation in a non-full-time employee hour situation, and work with a qualified broker to determine the most effective method for your business. Now here at Ahola, we are well underway with the 2023 filing year. Our deadline for reviewing and approving forms for 2023 just passed last week. So we're wrapping up approvals and print files for this year. Printed copies of the 1095 forms are shipping to our ACA service print clients beginning this week and are due to employees by March 1st. If employees have opted out of paper forms and they elected to receive forms electronically, the electronic copy must be available to them by March 1st. Ahola will be making electronic forms available to employees with the electronic delivery on Friday, February 23rd. Forms that have not been approved and finalized may affect this date. Electronic files must be submitted and accepted to the IRS by April 1st, 2024. Ahola will file our ACA service clients prior to this deadline. Now you'll see this slide also notes the paper form filing deadline of February 28th, but there's a recent IRS mandate regarding electronic filing for any more than 10 forms. So that means only very small self-insured employers will still be able to file on paper. All Ahola filings for ACA are electronic only, but we wanted to make note of the date in case it may be useful for anyone watching. Now, how can Ahola help with benefits? ACA information used to populate 1095-C forms and is housed in the benefits area of the payroll system. So our benefits services must be used in conjunction with ACA services in order to function properly and populate the forms correctly. Now, by using benefits administration with payroll and our ACA services, you can manage employee benefit deductions and plan elections in one place. Ahola's Benefits Administration Service also allows employees to manage their benefit elections through open enrollment and new hire enrollment if you choose this option. Open enrollment saves you time and effort, eliminating paper forms and re-entry of employee election data. Benefits Administration can also help you manage offers of coverage when utilizing measurement periods to determine coverage eligibility. Clients using open enrollment can choose to utilize qualifying life events to set up to automate offers of coverage to those employees as they become eligible based on meeting or exceeding full-time hour thresholds for the measurement period. As long as plan information and employee elections are properly entered and maintained, and employment statuses are current and correct, forms code population should be complete and accurate, requiring only thorough review and final approval in order to submit the filing. Each filing year, our ACA support team provides our ACA service clients with a help guide to assist with forms review and the approval. This guide contains what we hope is helpful information, and it includes definitions of IRS coverage coding and step-by-step instructions for reviewing and approving the forms. Once the forms are reviewed and approved, Ahola will file the forms and summary documentation with the IRS on your behalf. If you choose Ahola's print service for ACA, we can print employee 1095 forms for those that require a printed copy. Electronic delivery is always an option for both client partners as well as employees, just like all of our year-end documents. And that would be through the iSolve mobile app. The ACA forms are also accessible to employees through ESS, just like the W-2s or 1099s. In general, when ACA forms are populating incorrectly, whether that's an incorrect coding, employees not being included when they should be, or employees with forms that should not have them, it's due to incorrect or incomplete information in the payroll or benefit segments of the software. Our ACA support team is able to work with our benefits team to assist you in troubleshooting and correcting employee records in order to produce correct forms. Because missing or incomplete employment or benefit plan information is generally the cause of forms discrepancies, it's very important to review your 1095 forms before approving them. It is also important to confirm that all expected full-time employees are present in the reporting and are coded properly based on their benefit elections. ACA support can assist client contacts in determining why codes are not populating or why they aren't populating as expected. We can also help with the instruction on how to enter manual overrides should that become necessary. Another common ACA issue involves data mismatches that are identified during the filing process. Internal Revenue will reject ACA files with formatting or other foundational areas, but files containing information that does not match federal records will still be accepted, but with a status of accepted with errors. For clients filing with Ahola, we will notify you of informational mismatches and can refile updated corrections once those mismatches have been corrected within the payroll system. The most common data mismatches are incorrect or invalid Social Security numbers, and then name information mismatches. For example, the employee being listed in the payroll system as Jimmy Smith, when the IRS records indicate the name associated with the social should be James H. Smith, Jr. Depending on the information correction, W-2C forms may be required, and Ahola can assist you with those corrections as well. So for more resources, please access ahola.com for free compliance resources, blog articles, webinar recordings, paycheck calculators, and more. And please, please, please do register for our upcoming webinars. Thank you so much for joining today's session. If you have any questions about our services, feel free to reach out to me, Oscar, by emailing training@ahola.com or reach out to me personally by emailing omahia@ahola.com. Also, please feel free to reach out to Carrie and her ACA support team by emailing aca@ahola.com. We hope that the session was informative, as our intent is to keep you aware of the changes and trends that happen in the payroll space. Again, I thank you for your time, and I look forward to speaking with you all very soon. Enjoy the rest of your day.